The rise of TCS, India's IT giant, and its business model explained. Did you know that TCS, India's biggest IT giant, makes over $30 billion a year? But how did it get here? What challenges did it face? And what makes it a global leader today? Let's dive deep into the journey of TCS, its business model, financials, and whether it's a good investment right now. Do you think TCS is India's biggest IT success story? Who founded TCS and how did it start? The founders and early vision. TCS was established in 1968 as a division of Tata Sons, a conglomerate with a rich history in steel, automobiles, and technology. The company was founded with a vision to help Indian businesses transition into the digital age. J.R.D. Tata, as the chairman of Tata Sons at the time, he envisioned India's transition into an IT-powered economy and laid the foundation for TCS. F.C. Kohli, known as the father of the Indian IT industry, he played a crucial role in setting up the company and ensuring that TCS became a pioneer in software services. Initial challenges in the IT industry. The IT sector in India was almost non-existent in the 1960s. There were no structured IT courses, few computers, and hardly any companies working on software development. TCS had to build an ecosystem from scratch, which meant developing software capabilities without an existing IT infrastructure, training employees in-house due to a lack of skilled professionals, convincing Indian companies to use computers for automation. The first major project, Central Bank of India. One of TCS's first big projects was for the Central Bank of India, where they developed an inter-branch reconciliation system. This was a groundbreaking project at the time, as banking operations were primarily manual. Before this system, banks had to manually reconcile transactions between different branches, which was slow and error-prone. TCS introduced automation using punch card-based technology, making financial transactions faster and more reliable. This project gave TCS credibility in the Indian market and set the stage for larger projects in the future. How did TCS expand internationally? Entry into global markets in the 1980s. By the early 1980s, TCS had established itself as a leading IT company in India. But the real turning point came when they decided to expand internationally. The first major international breakthrough came when TCS partnered with Burroughs Corporation, now part of Unisys, a US-based technology company. This allowed TCS to work on software projects for American and European companies. Key factors behind international growth. Offshore model innovation. TCS pioneered the Offshore Development Center model, where Indian engineers provided IT solutions to global clients remotely. This reduced costs and improved efficiency. Expansion into BFSI, banking, financial services, and insurance. TCS began working with international banks, helping them modernize their IT infrastructure. First global clients. Helped Swiss company TKS Technisoft automate its banking software. Provided IT solutions for General Electric, GE, and American Express. TCS quickly became known for its high-quality and cost-effective IT services, leading to rapid international growth. The key turning points in TCS's journey. Y2K crisis, a golden opportunity, late 1990s. The Y2K bug was a global crisis where outdated software systems were at risk of malfunctioning at the turn of the millennium. TCS played a major role in solving this issue for international clients. TCS engineers rewrote code for global financial institutions, ensuring their systems didn't crash in the year 2000. This positioned India as a global IT leader and cemented TCS's reputation in the IT outsourcing market. IPO and becoming a public company, 2004. In 2004, TCS became the first Indian IT company to cross the $1 billion revenue mark and went public. The TCS IPO was a massive success, raising billions and making it one of the most valuable Indian companies. Post-IPO, TCS expanded its research and development, R&D, in AI, machine learning, and cybersecurity. How TCS makes money, its business model explained. Now let's talk business. TCS follows a service-based business model. But how does it make money? It has 5 major revenue streams. Instead of managing IT in-house, businesses hire TCS to develop software, maintain databases, and handle cybersecurity. TCS helps businesses shift to AI, cloud computing, and automation to stay competitive. It provides business software like SAP, Oracle, and Microsoft solutions to improve operations. TCS also offers strategic IT consulting to help companies grow faster. From banking to retail and healthcare, TCS tailors IT solutions for various industries. Who are TCS's biggest clients? TCS serves over 1,000 clients, including Citibank, Walmart, Vodafone, and Pfizer. It's a trusted partner for some of the world's biggest companies. How does TCS compare to competitors? TCS operates in a highly competitive IT services and consulting industry, where it competes with Infosys, Wipro, HCL Tech, Accenture, and Cognizant. Let's break down how TCS compares to these competitors in key areas like revenue, profit margins, global presence, and AI and cloud investments. Revenue comparison. TCS leads the market. TCS dominates the Indian IT sector with a revenue of 2.5 Indian rupees lakh crore, $30 billion, making it the largest IT services provider in India and among the top 3 globally. TCS's strong revenue comes from its diverse client base across BFSI, banking and financial services, retail, healthcare, and telecom. Infosys ranks second with 1.6 Indian rupees lakh crore, $19 billion, followed by HCL Tech and Wipro. TCS also has the highest market capitalization at over $200 billion, more than Infosys, Wipro, and HCL Tech combined. Why TCS has the highest revenue? Global clients. Works with 1,000 plus major enterprises, including Citibank, Walmart, Pfizer, and Vodafone. Multi-year contracts. Secures long-term IT projects, ensuring steady revenue. Diversified industries. Unlike Infosys, which depends more on BFSI, TCS serves a wider range of sectors, reducing risks. Profit margins. TCS's strong financial performance. TCS not only leads in revenue, but also in profitability. It maintains an operating margin of 25.6%, significantly higher than Infosys, 21%, HCL Tech, 18.2%, and Wipro, 16.8%. TCS's high profit margins are driven by efficient cost management, strong control over operational expenses, automation and AI integration, reduces costs by using AI-driven tools, premium client contracts, works with Fortune 500 clients that pay for top-tier IT solutions. Why TCS has higher margins than Infosys and Wipro? TCS offers higher value services like cloud consulting, cybersecurity, and AI automation, which command premium pricing. It has the lowest attrition rate, employees leaving the company, reducing hiring and training costs. Global presence. TCS's international reach. TCS operates in 46-plus countries with over 600,000 employees, making it the largest IT employer in the world. Why TCS has a strong global presence? First Indian IT company to enter the U.S. market in the 1980s. Strategic acquisitions in the U.S., UK, and Europe to expand its reach. Largest offshore IT delivery model, allowing cost-effective solutions for global clients. AI and cloud investments, the race for future technology. TCS is leading the AI and cloud revolution by investing $1.5 billion in AI, machine learning, and cloud computing. This is more than any of its Indian competitors. Key AI and cloud initiatives by TCS. TCS Neural Automation Suite. AI-driven automation for IT management. TCS Bind CS Cloud. AI-powered banking software used by international banks. Partnerships with Google Cloud, AWS, and Microsoft Azure for cloud transformation. How Infosys and Wipro are catching up. Infosys launched Topaz AI, an AI platform to automate IT processes. Wipro is investing $600 million in generative AI, but remains behind TCS. HCL Tech is focusing more on hybrid cloud solutions rather than AI. While Infosys and Wipro are catching up, TCS remains the clear leader in AI-driven automation and cloud computing investments. Conclusion: why TCS stands out. TCS remains the leader in revenue, profitability, and AI investments, making it the strongest player in India's IT industry. Best for long-term investors. Highest revenue and global footprint. Strong R&D in AI and cloud computing. TCS's stock performance comparison with Infosys and Wipro over the last 5 years. Tata Consultancy Services, India's IT giant. But should you invest in TCS right now? With recent financial results and market trends, let's analyze whether TCS is a smart buy for the future. Stay tuned as we break down the latest earnings, key financial metrics, and growth potential. TCS Q3 FY25 financial performance. Let's start with TCS's financial performance for the latest quarter. Here's a breakdown of the numbers. Revenue from operations: 53,883 Indian rupees crore total income. 56,001 Indian rupees crore net profit. 11,832 Indian rupees crore. Employee benefit expenses: 26,613 Indian rupees crore other expenses. 12,543 Indian rupees crore profit before tax. PBT 15,509 Indian rupees crore tax expense. 3,677 Indian rupees crore. Earnings per share, EPS 32.71 Indian rupees. TCS continues to post strong numbers, with high profitability and stable earnings. But how does this compare year to date? Total revenue, April, DEC 2024 Indian Rupee 160, 717 crore total profit for the period. 36,941 Indian rupees crore. Earnings per share, YTD 102.11 Indian rupees. Is TCS a good investment? Now, let's discuss whether investing in TCS is a wise decision. Here are the reasons why TCS is a strong investment choice. Consistent revenue growth, a strong history of financial performance and market leadership. Global market leader, TCS dominates the IT services sector with top global clients. Stable profit margins. Operating margins remain high at 25%. High dividend payouts. A great stock for investors looking for steady income. Digital transformation boom. Investments in AI, cloud, and blockchain ensure future growth. Resilient business model. Long-term contracts provide steady revenue even in downturns. Despite these positives, there are some risks you need to consider before investing. Slowdown in key markets. North America's IT spending has been declining. High employee costs. 26,613 Indian rupees crore spent on salaries in Q3 shows rising operational expenses. Intense competition. Infosys, HCL Tech, and Accenture are growing aggressively. Regulatory and currency risks. TCS earns most of its revenue from foreign markets, making it vulnerable to currency fluctuations and global policies. Should you buy TCS stock now? Now comes the big question. Should you invest in TCS right now? For long-term investors, TCS is a strong buy for those looking for stable growth, consistent dividends, and a dominant market position. For short-term investors, market conditions may cause stock fluctuations, so wait for dips before buying. After learning about Tata Consultancy Services in detail, if you decide to invest in this company, you'll need a demat account to purchase its shares. If you don't have one, you can open an account with India's trusted broker by clicking the link in the description. Closing and call to action. So, what do you think about TCS? Will you invest in it? Let us know in the comments. Don't forget to like, share, and subscribe to Busy with Business for more financial insights.